It's not quite the run into Christmas that borrowers would have chosen. The US, UK and European central banks all hiking rates this week, along with 5 other lesser knowns. The big 3 all slowed the pace of their hikes to 50 basis points instead of 75 or worse, but don't go thinking that means the end is in sight. Despite the aggressive hikes so far, all 3 central banks maintain inflation remains too high and have vowed to keep going. That's despite the Bank of England confirming the UK is in recession and inflation's peaked. Global markets were predictably unhappy overnight, Wall Street in particular after weak retail and manufacturing data. The Australian dollar hasn't fared well, it's back around 67. The local market here sold off today and it's down for the week, but don't get too despondent. So far, this is the second best 3-month run into Christmas in the past decade. The ASX is up almost 10% since September. Now, investors are finally turning away from speculative stocks. With money no longer free, investors can ill afford to chuck money at so-called growth stocks, the ones that promise profits in the far-off, distant future. And they've returned en masse to the boring value stocks, the companies that do make profits. This year, value has beaten growth by the biggest margin since the dot-com bust in 2000. And finally, NAB today became the latest bank to make a big deal about getting out of funding big emitters. They're not alone. There's been a surge in interest in carbon credits lately in anticipation of tighter emissions controls next year. They're back to a 6-month high. That's finance.